Hi everyone, welcome to this ABA webinar about modernising payments and what does it mean for customers. So can I begin by acknowledging the traditional owners of the land on which we meet today and pay my respects to their elders past and present. For us at the ABA, we are located on the traditional lands of the Gadigal people of the Eora Nation. Our member banks and their services are located across the lands of Aboriginal and Torres Strait Islander peoples, whose 65,000 years of continued connection to country is a source of immense pride for us all. And on to this webinar. What is today about? So in June last year, the Australian government published its first strategic plan for the payment system. To paraphrase a 40-page document, the plan laid out the government's vision for a payment system that serves our economy, our businesses and consumers. The vision is that our payment system should be world-class, be trusted by its users, and support innovation and competition. In more practical terms, the strategic plan also set out the case for modernising our payment system, in particular by winding down the cheque system by no later than 2030, and for moving from the legacy system BECS to our real-time payments platform, the MPP. So work is now underway to implement the various components of this strategic plan. And as that happens, we're hearing more questions from customers and industry stakeholders about the why. So why are we doing this? What are the benefits and what is the impact? And in particular, what are the benefits and impact for the people that use our payment system and not just from the payments industry perspective? So today, ABA is very fortunate to have 4 fabulous people here to answer some of these questions. In no particular order, we have Carolyn Young, Head of Payments and Cash Management Solutions, Australia and PNG from ANZ. Peter O'Brien, Managing Director, Client Engagement Global Transaction Services at Westpac. Katrina Stewart, General Manager of Business Payments at Australian Payments Plus or AP Plus. AP Plus is the owner of the real-time payments platform MPP. Simone Joyce, Chief Executive Officer of Paperplane. And I'm Rhonda Law, Policy Director for Payments and Digital Banking at the ABA. In terms of content today, first we'll focus on the reasons for moving to faster payments and some of that practical why and what are the benefits and impacts from the customer's perspective. And then we'll come to winding down the Australia's cheque system, what needs to be done and what work is being carried out by government or industry to help users manage that transition. So going to the first topic, the move to faster payments. So after the government published its strategic plan and that set out a vision of modernising our payment system, AusPayNet, which runs the BECS system, has worked with the payments industry and made a decision to have a target date of 2030 for decommissioning BECS. And this decision has also been supported by the Reserve Bank Governor. These decisions or the endorsement from government and the RBA recognises that in practical terms, a significant number of payments have already moved to the MPP, and that includes some business and government payments. And also, as we would all know in the last few years, as consumers are increasingly using digital and mobile payments, their payment behaviours are changing, and so are their expectations about what further innovations, what kinds of innovations they want to see from the banks and payments providers. So going to Katrina first. Katrina, could I ask you to talk about what are some of the key trends and figures that you have seen from the MPP perspective?
Thanks, Rhonda, and delighted to be here today. So the MPP has been up and running now for about 6 years. We see about 1.5 billion transactions are now being processed across the platform, worth about sort of $5 billion of daily value in payments. The MPP is accounting for about 1 in 3 of every account-to-account payment in Australia now, and we're seeing growth of over sort of 20% year on year. And Pay ID registrations have just recently tipped over about 20 million as well, which is very exciting. I think over the years, what we've seen is really an expansion in the use cases for the MPP as well. So initially, the focus was very much on kind of, sort of P2P payments. I'm paying you, Rhonda, or I'm paying, kind of my family. And the MPP would be used to divert those payments and process them. But increasingly, we've started to see business and corporate and government use of the MPP expand as well. So we've seen businesses use it to accept payments from customers, and particularly with COVID, when a number of small businesses had to kind of pivot to accepting payments remotely and accepting them digitally, so that, the Pilates instructor could keep operating, restaurants could keep operating and accept payments from their customers. And increasingly, we're seeing business use, particularly for payments out. So disbursements to merchants, for example, for, travel insurance claims, paying taxi drivers over weekends or at the end of a shift, and government use as well, particularly again during COVID, when there was the need to do kind of emergency relief payments to citizens as well, and do that over a weekend at scale. So, I think it's been really exciting in terms of the journey that the MPP's been on, and the increasing expansion of the use cases that we're seeing with the platform as well.
Great, thank you. So again, going to the customers kind of lens, there's obviously a level of awareness from different customers that this is happening, but also, as we're all hearing, some questions about what does this mean for me as a customer. So maybe going to Carolyn first and then Peter. Wonder if you can just briefly talk to what kind of questions are you hearing from your customers about this transition and this journey?
Yeah, thanks, Rhonda, and thank you to the ABA for the invitation. Yeah, certainly customer awareness is building, and I think that's in part to all the members of the ABA and the broader ecosystem are actively talking and conversing with various users of payments across it, whether it be retail through to business, and certainly the higher end institution and government. As you can see, as Katrina talked about, the use cases and applicability of the services is starting to build momentum. So the conversations are getting richer and richer. The awareness of real-time payments is really built on those conversations. So the more that we actively participate and talk to customers about their business models and their operating models, that will, of course, build awareness. But the questions that are coming from customers are certainly around, of course, what is the value? Why do I need to go faster? And that emphasis around faster is often the initial conversation point, because real-time payments speaks to speed. But I think that's where the conversation needs to elaborate more into the other features and benefits of real-time payments and what the infrastructure can bring. So, the convenience factors, the flexibility, the harmonisation opportunities to simplify your business. But I also think, what is the opportunity for me as a customer to look at my business model and create experiences from the payment, whether it's part of my business and operating model or a particular product development activity, or is it an opportunity to really look hard at the financial operations that I have within my organisation and realise some efficiencies that real-time payments can present. So the benefits of working capital management and visibility that real-time payments does present, and managing my cash flow on a day-to-day, just-in-time basis. So it's a real end-to-end conversation, and some customers are leaping at the opportunity, like I said, to look at their business model and really shift the dial in their experience by potentially embedding the payment experience as part of their end-to-end product. And then those that are looking to drive those efficiencies and really scrutinise the way that they've been making a large volume of payments, because what's facing us is effectively, as Katrina mentioned, a large part of our retail transactions are already going faster. So the opportunity is really around what our corporate and business flows are and how to modernise those, which is, really, a $16 trillion opportunity, right? We're still processing that many direct entry payments on those legacy rails. So how do we shift those? And so those conversations and questions are really being asked by our customers. Peter, have you got a there too?
Yeah, so probably expanding on what Carolyn was saying, you know, when we're thinking about, we're taking customers, so we have BECS, which is direct entry, but when we think about also cheques, we're taking customers from our slowest payment method to speeding it up to almost real time. And I think some of the things that they're thinking about there is, how do I change my processes to take into account that change? Does everything need to come at the same speed? So does a salary need to go at the same speed as what Katrina was talking about, the opportunities to actually make payments where you need to have them fast? We know that the governments are thinking about faster payments from the perspective of supporting small and medium businesses for cash flow purposes. So that's really important for the economy. Some customers have specific legislation that the government needs to consider, and we'll talk about that a little bit later on, but, you know, where they actually legislated that they have to hand out a cheque. So we have to think about what that might look like and where the government needs to step into that. What's the appropriate level of friction in our payment system? And what I mean by that is, a cheque is the slowest, so therefore seen as almost the safest, because you've got a lot of time between when you issue it to the time that it actually gets banked to determine if the person that you've given it to is not the right person. In a real-time sense, we've now had to think about that almost immediately. So the work comes at the front around that due diligence that you need to do on who you are paying, and that'll be supported by what the industry is doing around the scams accord and everything on, you know, how you determine that the person you think you are paying is the person you are paying, or the organisation. I think when we think about processes, you know, there's customers now that today take cheques that we're sitting there, they're saying, if you take cheques away from me, how do I pay someone when I don't know their BSB and account number? So that takes into account change of forms, change of the way that you actually, you know, process with customers and ask questions. And I think the other thing which Carolyn touched on is we've entered the age of the 24/7 treasurer. So you are going to come now where your payments are coming fast to you, but what are you doing with them? So there is that opportunity around liquidity management and better working capital management.
Great, thank you. And so Carolyn's spoken about the benefits, a number of the benefits of moving to, I guess, faster payments. It's real time, but it not necessarily always real time. And I think what Peter and Carolyn have said really highlights that this is an industry, like a payments industry effort. It's not just, you know, something that MPP is doing, something the banks are doing. It takes everyone in the payments industry to bring our customers on this journey. So what I want to do now is to kind of break down a little bit more some of the benefits that Carolyn and Peter have spoken about. So Simone, going to you, could you maybe explain in kind of practical terms what speed, what kind of benefit speed actually brings to a customer?
I think that when you think about a payment into a business, you have to consider the business and also the person paying. And Carolyn and Peter made some excellent points about what businesses are considering. And I think in addition to that, thinking about customer experience and the choices that this may actually open up for the payer, or the end consumer, if you want to use that language, that can't be underestimated either, particularly in an environment where we're hearing a lot about cost of acceptance of payments. Having an alternative payment rail that meets that confirmation that funds have been successfully sent across, or that the funds were available, that actually really ups the element for competition and choice of cost of payment. So I think that's certainly not related to speed, but related more to the payment rail choice itself. I think the theme that I heard from everyone talking first was, we've seen a great shift in the unconscious choice of real-time payments. So when you're sending money to someone today, that likely happens over a real-time rail, whether you realise that or not. But now we're looking at the conscious move. So how do we consciously get people to choose a real-time payment over other methods available? And speed is definitely one of them. If you're thinking about e-com, if you're thinking about walking away with a goods or taking a service in your hand, that's where cards have excelled because of that real-time confirmation of payment success. That's a real benefit there. I think secondarily to that, because your question was really about speed, you can start thinking about how robust your processing systems are as a business. So if anyone is running direct debits today and a way to get paid, I'm sure there's a beautiful exceptions process that may have a manual element in there where you're, maybe ringing the customer 3 days after the debit happened, or you're going through some file rejection issues where it's one payment, but your full run of, 500 payments got bounced back. That goes away with real-time payments, not because of the speed, but because of the structure of the payments. Each individual transaction is considered in its own right without its friends in a batch file. And that can't be underestimated from the perspective of modernising business systems, improving customer experience, improving cash flow outcomes. That's really powerful. And whilst I think that AP Plus and the banks are doing a fantastic job bringing the infrastructure to life, we really need to start thinking about particularly things like Pay2 as a product that we need to wrap support structures around. So how do you bring this into your systems? How do you think about it as a business? How do you run it through the transition where you might have fast and slow running together for a few years through the transition? I think that's where the real opportunity is, and speed is just one benefit in that whole process.
So if I can just ask a follow-up, and what does that mean if, say, I'm running a small business and I'm doing everything, or the family's doing everything? What does that mean when we are thinking about moving from a way of paying that I'm already familiar with to something that is a little bit unknown? And how do you talk about speed and some of these issues?
Yeah, I think change in any circumstance, whether there is the most compelling reason in the world, change is always a thing to manage. No one goes forward into change with delight and glee. And that's what we're facing as a nation over the next few years. It doesn't mean the outcome's going to be bad. It just means that we have to hold each other's hands as we go through the change. So in that question, Rhonda, we've got a family business, or I'm a business owner and I'm literally doing everything. Speed's actually going to give you time back in the day. It's going to give you time back where you don't have to think about, I've got to get my payments done before 4 p.m. on Friday because the banks are going to close over the weekend. I can't pay people, and then I can't receive payments if I don't have these activities done at this particular time. We've been through most of the public holidays this year, Easter and Australia Day and all those national banking shutdown days. That won't be a consideration for businesses anymore. The real-time payments infrastructure is 247, 365. So we're starting to really give time back to business owners by taking some of those sticky spots and removing them. From a speed perspective, it means that when you walk in the door that day, that you'll know immediately if your payments have been successful in real time as they run. That means you can make decisions about, am I going to put through the stock order for, the extra coffee cups? I say that because I'm drinking a coffee, but you'll know immediately when you can make these decisions. You won't be thinking about, I've got to wait for, processing day 3 because I don't know how many payments have been rejected on me today. I don't know if my, my supplier payments are actually going to come out at a time before I receive the bulk of my incoming invoice payments. I don't know if there's a gap there and if I'm going to go into overdraft. Those things will disappear because you'll be very precise in when those payments are happening. And that's the gift of the real-time payment infrastructure. But it also means that you can set up your payments to suit you as well. So you've got more control over when your payments run, not just the day they run. You're no longer at the whim of when your banking sponsor submits your batch file, you missed the cutoff or you have to wait for the next one. You can manage that within, seconds of reality. So I think that's a powerful thing for a business owner to have that control and time back across their day.
Great. And Peter, I wonder if I can come to you to speak about what are some of the other benefits that you see, and including the ones that Carolyn has referred to earlier.
Yeah, sure. And Simone just touched on some of the key ones. Faster payments are obviously fast. that is that whole consideration. And I'm sorry, I'm about to have a warden speaking to me here. So do you want to go to someone else for a minute, Rhonda, while I get rid of this, or can we just wait 30 seconds?
Yeah, well, maybe following on what Simone said, Carolyn, can you also maybe speak a little bit more about whether there are particular benefits that resonate more with different types of customers, or large corporations, small businesses, government?
Yeah, no, yeah, happy to. And Simone did an exceptional job talking in the context generally of a small business operator. Like, their core competency, a sole trader in particular, their core competency is their trade, right? So they don't necessarily have, as you say, the time and potentially the skill set around managing their business, and you know, real-time payments can play a role in helping with that. So the different types, the experience is very much based on the nature of the customer and their business line, right? And the size of the customer will obviously play a role in that, and the degree of change that's required that Simone alluded to. You know, small business convenience control is absolutely critical. That's equally plays out into a large institutional corporate customer who has a materially more complex business, multiple entities, perhaps disparate systems and processes that are managing payments. Their core business may not wholly hinge around the payment activity, but the operational efficiency and the processes around it really does, you know, is a complex matter for them to manage. But for them, you know, the convenience is a key factor. We've had customers who have missed cut-off times under the current systems and really are at a really critical juncture because they fail, you know, they'll miss key obligations, whether it's making salary payments or whether it's meeting supplier obligations and therefore fulfilling goods. So, you know, the same problems resonate whether you're small or large, but the scale of challenge can be much more material when we get up to the high volume customers. And I guess in that point, you know, the speed aspects are incredibly useful because, as it talks about, you may have run out of time, but equally there will be variation in the demand for speed. So, you know, Peter alluded to the fact that not everything needs to go fast. They may be faster than what we have now, but equally I may have a material volume of transactions that really, you know, don't point themselves or lend themselves to being urgent. So how do I make sure that they're still delivered in a fast, in an efficient and controlled manner with the certainty that everyone's expecting when they make a payment? So I think, you know, the benefits resonate in different ways, but they're certainly still consistent across the various spectrum of customers that we deal with.
Great. Peter, can we come back to you just to talk about the other benefits?
And I think what Carolyn said is important. You know, that reconciliation part for payments is the bread and butter for every business, small and large. There will be whole departments sitting there today trying to reconcile payments that have come into bank accounts that you do not know what they are. When we're thinking about things like Pay To, that absolutely gives you that preciseness about this person is paying me for this thing. And you also know, which I think we spoke about, is the ability to then know almost immediately whether that payment has failed or has been successful. And that enables you to have a really good client experience with your customer because you can automatically go to them straight away. You can choose when. You could say, okay, I'm going to leave it till the end of this day. I can try again with that payment, or I can ring the customer and see if there's a problem. Do I need to intervene? Do I need to help in some way? I think there's better security. I think we all know that we've seen a rise in direct entry fraud around direct debiting, where people are taking BSBs and account numbers, and we know that is a problem for our small business customers and large. When you're using Pay To, because it's sitting on a banking app or a financial services provider's app, you've actually gone with them, confirmed with them that the mandate belongs to them. They've okayed it. We know exactly what's going to happen. And that goes also to the end customer's experience around better control for them about when money is coming out, what's happening, can I pause it, and having a better conversation around that. I think the ad hoc mandates that we talked about, where it's not a recurring pay-to payment, but where it may be the example that we use, the plumber that has come to your house, that he could effectively send you a notification to do an ad hoc payment, a travel agent, for instance. And Simone touched on it. These are real alternatives to using credit cards without some of the cost that's attached to that, where it's real time, you know, you've got the money and you can start to deliberately do your ticketing or provide the service. And I think, you know, these are all alternatives to cheques, acknowledging that, you know, it will take some time for them to wind down, but customers do need to prepare for that now.
Right. I think we're probably moving on into the space of new features and functions and innovations that's enabled by the new payments platform. And that's something that the Reserve Bank Governor, Michelle Bullock, certainly highlighted at the end of last year at the AusPayNet Summit. And one of the points that I think resonated with the room was there are a number of innovations and new services that are possible and that users now increasingly expect that are possible with the MPP that can't be done with a very a workhorse system like BECS. So Katrina, maybe can I move to you to talk about what has been built in the MPP and what else might be coming?
Sure, thanks, Rhonda. I mean, the MPP, when it went live, just essentially facilitated a push payment, right? So I had to go into my banking app and push a payment out from my account. And that was relatively limited in terms of how that could be used, I think, particularly for kind of business and corporate payments and some of the use cases that people were looking to be able to do on the MPP. And so that was why we looked to build Pay2, which has kind of been mentioned a few times already. And at its core, Pay2 is about providing the opportunity for third parties to be able to initiate payments from a customer's account with their authorization. And once you actually have that capability, that really kind of opens up the use cases that the MPP can be used for. So it can be used, for my recurring utility payments. It can be used, for e-commerce opportunities whereby I'll actually set up my account on file, similar to how I might set up my card on file today. It can be used for in-app payments. It can also be used by corporates and businesses to have other third parties facilitate payments on their behalf. So to do payroll runs and superannuation runs and bringing it together with e-invoicing as well and really kind of creating a more seamless procure-to-pay kind of cycle. And I think that's, really kind of foundational capability that we think will kind of transform how we see real-time payments being used here in Australia. And we're already starting to see some of those kind of use cases that maybe we hadn't even thought about when we were building Pay2, so that, you can invest in bonds today and you can basically go and withdraw money from an ATM without having a card. And it's really kind of, I think, sort of endless in terms of what the opportunities are. So to us, Pay2 is really foundational kind of capability that we've worked collectively with the industry and with others to bring to the market. Some other capabilities that we're looking at is international payments. So we recently went live with our international payment service. So that enables the final leg of an inbound payment to go across the MPP. And I think what's important there is kind of coming back to some of the benefits is it's about making those payments not just faster, but making them safer as well, because you can actually identify them as a cross-border payment. You can carry information from where that payment is originated all the way through to the receiving bank. So therefore they can then conduct, all of the AML or other, risk associated processes that they need to do. And more recently, we're also looking at confirmation of payee as well. So we've kind of touched a little bit on one of the benefits of the MPP being around payee validation, which I get today with PayID. And it's really powerful kind of being able to actually confirm I'm paying the right person at the time that I'm making that payment. And based on research that we've done, a staggering 1 in 4 users have said that they have either stopped or edited a payment because they could actually see who they were paying before they submitted that payment for processing. And we now need to kind of extend that out to BSB and account number payments as well, because I think increasingly people expect to be able to know who they're paying and know that that's the correct person, and not just from a kind of to protect against fraud and scams, but also to ensure that we're reducing mistaken payments as well, which we still see happen a lot when people do kind of, sort of fat finger errors, etc. So there's some of the things that we're focused on from an MPP perspective. And then not so much from kind of new services, but I think we touched on earlier the decommissioning of BECS and what that's going to mean for the industry, and how we need to work collectively with the industry and others to migrate those payments over to the MPP in a kind of considered way, in a way that ensures that we've got consistency and standardisation where that's really important, particularly around things like treatment of data and how that's going to be carried through in the MPP messages, and what capabilities we need to have in place to support that effort, and whether that's looking at things associated with resilience, with the platform capabilities, but also the message usage and how we can really kind of unlock more value from the structured data capabilities of the MPP as well.
Great, thank you. And pay verification or confirmation pay has come up a few times already, and that's certainly been a very significant announcement from the banking and payments industry back in November, that this is a $100 million initiative that the MPP and AP Plus are working very hard to design and build out, and then to allow all its participants to connect into sometime over the next 18 months and really get that benefit to every customer's computers and phones. So just on the theme of what businesses can do and also the experience of starting to use these functions, I wonder if I can go to Carolyn first, then Peter. Do you want to speak about a little bit more about either of these points?
Yeah, sure. Thank you. I touched on earlier about, I guess, customers taking two potential lenses on the opportunities with real-time payments, whether it's the push payment side of things as well as pay to. And I think from a business model perspective, we've had customers that are really accelerating the development of new product capability to support or leverage that real-time payment. So, and specifically in the industry, insurance industry, a particular customer took an end-to-end opportunity with a real-time experience across their claims application process, and effectively receiving claims on policies online, assessing those in real time, and then effectively a decision-making process that would be then ultimately fulfilled by a real-time payment. So we're talking about minutes rather than days and weeks. And there's a number of technology touch points that enable that, not only real-time payments, but effectively they saw this as a way to really take a leapfrog approach to differentiating themselves in market, and it is very much a best in market 24/7 claims experience. So it's a real proof point that payment experience is embedded, but it's also not necessarily the lead, the front running of the process. It's very much part of a business transaction that is executed between parties rather than payment itself. And then I guess, the other situations and scenarios that I talked about, customers really, unpacking the opportunity to look at their financial operations and the way that they are fulfilling their P2P obligations or their cash cycle. We've had customers who are at an opportune time reviewing their own internal systems and processes and going through a change activity. So they really took the opportunity to future-proof themselves for what would lie ahead from a real-time payments perspective, and really adopt the ISO standard that is very much the core of the MPP, and really give them this opportunity to consolidate the various touch points around the various payment types that they make and use ISO as the cornerstone for that. So that was an important development for them in their roadmap, and it now means that they can really leverage a variety of payment types with given the opportunity to leverage MPP for the urgent and ad hoc activity, and now increasingly move their batch transactions to an ISO format, but also then leveraging the speed and certainty that MPP presents.
And I might just expand on 2 points that Carolyn made then, in terms of we're moving from a batch to individual payments, but in some cases we've had similarly a client that's looked at where they need to do settlements, and those settlements need to effectively be a batch of real-time payments. And so that's been very effective, and I think we'll start to see that in the industry a lot more as well, rather than that one-on-one, it's a many or a one-to-many. And then I think the other thing, when the NPP first came about, we always envisaged that there would be an expansion of what we thought would be overlay services. So the ability to send a payment, but also to send some sort of document or remittance advice or whatever with that document in real time, so you knew what it was that you were receiving. So I think we'll start to see that as well. That deliberate friction in terms of, do we need to start thinking about batch payments, because customers may very well want to do an NPP payment, but they may not want to do it today. They may want to plan ahead. And I think that's important, again, for taking some of that time back for small business, especially where things have got to be done, but you don't want to sit there and remember it. So you put it into a system and it'll happen as it needs to.
Thank you. And just on the point of, we are seeing more kind of overlay in other services coming that maybe we didn't expect when the MPP was first started. Katrina, can I come to you? What else might be coming on the MPP?
Sure, and I think I'd probably kind of focus on two areas. I think one is really kind of embedding some of the capability that we have put in place today. I mean, I think we're still very early on in the Pay2 journey, and we've kind of really focused on business services that will really enable organisations to do a range of things with that capability. So I liken it to kind of Lego building blocks that we kind of, as the platform operator, need to put in place, and then different organisations will do different things with them. So, ANZ might sort of focus on one aspect of what solutions and services they can create around that. Paperplane might look to utilise some of that capability differently, which again could also be different from how Westpac wants to use some of that capability. So it's really been about creating that foundational capability in business services, as we call them, in terms of the capability and the rules that govern that capability, that enables all organisations to then utilise that on a kind of unilateral basis. And I think that really kind of opens up what can be done from an innovation perspective. So I think it's really about embedding some of that capability that we've delivered over the recent years, and expanding out the use of the MPP as a result. I think it's also about extending some of the capability as well. So we mentioned confirmation of payee, so that's really kind of extending out beyond PayID to kind of have that payee validation and that capability in place, and not just from a retail consumer perspective, but also actually how do we use that like in a bulk payment scenario as well, because there's lots of value for businesses and corporates and government agencies to also get confirmation of who they are paying, and then that's the right payee as well. And how do we build some of that into existing processes? And then with international payments, as I mentioned, we've recently kind of enabled the inbound leg for real-time international payments, but increasingly, globally, there's a kind of work going on to look at how do we start to interlink some of our fast payment systems around the world. And what's that going to entail, and how do we actually have true cross-border real-time payments happening? So I think we'll kind of start to see some extension of the capabilities that we have kind of really focused on putting in place as well. And then it's about how different organisations will look to utilise that capability and what they can do with that. And I think that will kind of really open up what the MPP can be used for, and there'll be things happening that we hadn't even thought about when we were building some of this capability.
Rhonda, can I just add to that quickly?
Sure.
I love a good metaphor and an analogy, and the Lego blocks was a good one. But I actually think about it a little bit differently. I think that what AP Plus has built with the NPP actually can't be considered in isolation for the potential that it has to change the innovations and the different products and services that are coming. It has to sit alongside and act as a pillar that holds up the floor of the digital economy that the government's been talking about for a few years now. I think the other pillars are the consumer data right or open banking. I think together with real-time payments, there's some very exciting things that will come to market as we progress down the years. And the third one is digital ID, which has been mentioned a couple of times. But those three things working together as a piece of the larger whole, I think we'll see some incredible innovations come to life. Australia is blessed with some pretty forward-thinking fintechs, and actually the way that we've thought about all of those things from a regulatory perspective and from an infrastructure perspective is well above and beyond some other countries in the world. So we're at a point now where we can start to see a little bit of the glimmer of what's around the corner, building on this infrastructure that's been built, and it's a pretty exciting time. So I think of it as pillars, but Lego blocks works too.
Thank you. That's an excellent point, and I love the way you've kind of talked about the broader digital economy and not just payments in isolation, because ultimately, we're not making payments just for the sake of making payments. It's to do something, to allow us to do something in our kind of everyday life. And I just, on the theme of digital ID, I just want to call out that the government has allocated quite a significant amount of funding, the budget that was announced on Tuesday evening, to build out, I think initially the government's kind of connection into and use of digital ID services, and then with the legislation that's in Parliament, the idea is that in 2 years' time, private providers can also participate in that system. So it's certainly a very, very exciting time to see these various strands of our kind of digital economy come together. And I think from the ABA's perspective, we'll also obviously do a lot of work with in terms of customer accessibility. So it's also very encouraging to see some of the principles about access and not forgetting everyone in the country, kind of built into the government's thinking about payments and digital ID from the start. But Peter and Carolyn, just with that very broad kind of canvas, would you like to make any further comments about what may be possible over the horizon?
I'm happy to touch on that. So, when we do think about those things, and I think Katrina spoke on it, and actually I think Carolyn did too, when we think about even just the move to ISO, we've had a situation probably across the industry now where customers have been somewhat tied to an individual provider because of the way that their file format has worked or the way that they've been integrated into that banking system. What ISO does is start to standardise that, and it starts to give the ability to be able to shift and move for customers, which I think is a positive thing. You want to hold your customer because they love being with you, not because they're tied to you from a technical perspective. And I think when we think about what ISO is also bringing us is that standardisation, which means that it's easier to track payments. It's easier from a money laundering and financial crime perspective, that you are able to look at that and see all of those payments in the same way, and to be able, for the government to be able to review those. And, AusTrack plays an important part in this, is being able to pick up those payments that we want to see that are not the ones we want going into the industry. So, yeah.
Look, I think everyone's really set out a great way for the opportunities, I think, with MPP and faster payments and the future of payments. Like, more broadly, I think the pillars and the Legos, they all play a role in this. I do think what Simone's mentioned is that there are many component parts to shoring up the credibility of the payment system. And I think, things like digital ID are really quite critical to making customers comfortable with the ways and means that we are going to facilitate, value for them. And the fact that, that they have a lot of trust in the system. And I think that's, we can't underestimate that in the conversations we have with customers. You know, at the end of the day, they very much want the reliability, stability, and the certainty that the payment's going to be made. That often, sometimes they are quite agnostic to that, to the how it's being done, but those are the things that they seek out in it. So it's really important that we keep innovating. That are, you know, holding some very valuable assets for them. I guess the only other comment that that I think we need to reflect on is the fact that we have a really good kit bag of capability in our infrastructure already, and it's really to the opportunity is there to take advantage of that. And certainly there are things, as Katrina set out, that needs to be consistent and part of you know, the fabric of the infrastructure. But equally, you know, every participant has ways and means to play a role in bringing a great proposition to their customers. So I think, you know, the increasing number of providers in the system is an important part of that. And I guess the other thing is, you know, we have got a leading capability. I mean, I think, you know, if we benchmark ourselves, and I think Simone and Katrina, you touched on this, we benchmark ourselves against other markets. We are the, you know, most sophisticated real-time payments system in the world, and there are and there's still much to grow and volume to be added to the system, but you know, we really stand ourselves out as being a capability with real-time transactions and clearing, as well as settlement. That is not something that is being met at the same level as Australia. So credit to the industry and everyone on this call, really.
Thank you. Now, one thing that's been touched on a couple of times already is it, you know, it takes work to change the way that a business makes payments and receives payments, and that's whether you're a small business or a large corporation. And obviously, as the NPP was, you know, being established and launched, there were a number of questions from various stakeholders about, you know, what is the actual impact, and, you know, is it worth it, essentially. So Katrina, I wonder if I can come to you to just speak briefly about what are some of the questions that have been raised about a move from, say, BECS and the MPP.
Thanks, Rhonda. Yeah, there's a lot of kind of common questions that we hear from the marketplace. So, you know, one is around account reach and what actually is the kind of sort of network that's reachable with the MPP. I mean, now that we have sort of over 100 million accounts that are reachable in the marketplace, I think that one is kind of largely in place. And yes, there are kind of still some pockets of account reach that need to be closed. And I think all banks are kind of really focused on that in preparation for the migration of BECS payments. You know, cost has always been one traditionally that comes up, not surprisingly, in terms of people kind of talk about the fact of, you know, what they're paying today with the legacy systems and what does it mean to move to the MPP, and is it going to be more expensive, and, you know, can that cost be justified in terms of the change effort that's required as well. And certainly as the platform operator, we've been very focused on, you know, as volume grows on the platform, how do we ensure that that kind of wholesale and scheme cost is coming down as well, because you know, we do really want to encourage the migration of MPP payments, and that's why we've been really focused on what we can do as the platform operator. And so traditionally we've actually operated on a fixed cost recovery model, so actually just kind of, you know, trying to take that issue off the table, and we've seen that kind of computed transaction costs come down, you know, considerably from when the MPP went live. So, you know, initially it was at kind of 40 cents and we're now down to around about 5 cents, and it's very much a continued focus for us as we see more volume come over to the MPP, and how do we ensure that some of of that benefit is flowing through as well. But I think it's also important to recognise that, you know, moving volume over from BECS to the MPP is not necessarily a like-for-like substitution as well. I mean, I think there are considerable pockets of value that can be unlocked as well in terms of what benefits that, you know, businesses and corporates and others will get from a migration to the MPP. And we've touched on some of that, and, you know, some of the operational efficiencies that can actually be unlocked, some of the data-related efficiencies that can really be utilised, but then also from a kind of innovation and a customer perspective, how can, you know, businesses and corporates really kind of generate more value for their customers by re-engineering that customer experience as well. So, you know, I think it's kind of also important to think of it from that lens. You know, kind of resilience is something that comes up as well in terms of, you know, how do we ensure that the MPP is operating? It is a real-time payment system. We've touched on this a few times. You know, it's intended to be up 24/7, 365 days of the year, and we have very kind of high standards around availability. So all of our participating banks are expected to be up and available all of the time except for 2 minutes a month. So, you know, I think that's a really kind of high standard that we're keeping everybody to. I mean, obviously there's more work that needs to be done as we think about resilience, and particularly as we look to kind of scale up more volumes on the platform, and it's a really key area of focus. But also just the kind of the architectural setup of the MPP also does lend itself to delivering high resilience as well. So it was intentionally designed to be a distributed architecture whereby if one participating bank is having issues, all of the other participants in the ecosystem can continue to operate and process those payments as well. And, you know, from what we see when there are incidences of outages, the recovery time is, you know, in most cases, you know, pretty short as well. So, you know, and within the kind of cycle of you know, what the next DE file transfer might be as well. So I think increasingly as the MPP has kind of matured and you know, we've kind of worked really hard with industry to kind of ensure that some of those foundations are in place. You know, I think some of those kind of initial kind of concerns have largely gone away.
Can I add another comment to that, Rhonda?
Yeah, of course.
All these comments back for Katrina. So on the cost as well, I think it's right, it's about value. And that's a different conversation than we have today about the cost of payments in Australia. I think that unfortunately there is a black spot in information on how much it actually costs you to operate a direct debit system or a direct credit system in your business today, because there isn't that collective pool of data that says, okay, when a payment fails on the direct debits, the actual business loss impact is XYZ, and that's taking into consideration recovery time, manual intervention, loss of, you know, ultimate loss of payment due to lack of contextual response. All of that stuff's largely an unknown, and I think we'll only, unfortunately, see what the value is after we switch over and we go, oh, all of these other things are now much more efficient and therefore more cost efficient for me. The other one is on the uptime and the resiliency. I think it's a funny thing that we have this expectation of 365, 247, fair enough. But if you actually compare the real uptime, even with the sporadic and very limited outages that we've seen in the years, I'll still take that any day of the week over weekend shutdowns, after 5 shutdowns, public holiday shutdowns. It all adds up to a lot more availability over time. But I think that the bit to focus on is when there is an outage, what does the recovery look like? And how do we make sure that there are no, you know, payments lost in transit? How do we make sure that all the data is distributed to the parties that may have been impacted in a way that they can action and understand? I think that maybe that's something that the industry is also getting a lot better at as we go through this process. So for me, it's less about, oh, it has to be, you know, 5 nines uptime all the time, to how do we make sure that when there is an outage, because nothing's 100% guaranteed, everyone in the business knows that, how do we make sure we get back on track as quickly as possible without loss?
And just to jump in there, I mean, that's sort of some of the capabilities we're very focused on in relation to thinking about migrating BECS payments over to the MPP, and what capabilities we need to have in place across the industry to ensure that kind of fast recovery time as well. So the kind of the ability to replay payments kind of automatically, and to be able to process those really efficiently and get things back up and running quickly. As well as, you know, I think I'd like to call out that there were some kind of things put in place from a design perspective that also enabled that recovery to happen as quickly as possible as well. So kind of queuing of payments from a settlement perspective, so that when things kind of came back up and started running again, things could start to flow. But absolutely a really key area of focus for us and for the industry. And just to your point about, taking the 24/7 even when it's out, Simone, I mean, one interesting kind of data point is we see about kind of 25% of payments are actually being processed outside of business hours. So that just kind of shows you the kind of impact of that availability and how important that is, and being able to, make a payment, whether it's midnight on a Friday or on a public holiday, or, whatever the situation might be.
And Rhonda, I think that's an important point, what Katrina just said. When we think about small and medium business, they operate in business hours to operate their business. It's typically after hours that they're working on the business. And that's why it's important that we have something that is not something that we have a close of business at 5 p.m, 6 p.m, whatever that is, because that's not the way they function. And small and medium business is what drives Australia's economy. So that's really important. The other thing that I think what Simone touched on in terms of calculating what your cost is, there's a real danger that a customer says, I'm going to compare the transaction price of DE to pay to and say, that's more expensive, therefore. Whereas Simone raised the really good point, you're going to cut out things like rejected payments, you're going to cut out not having to store the cost of paper for DDRs. I think it's not only just direct entry that's going to be the comparison that they need to make. If you made a credit card payment or a BPay payment, they are also alternatives that will convert at some point in part to what Pay2 brings to us as well.
It's a really interesting point you make, Peter, because, often customers, they don't look at that total cost of operation, right? And as much as they appreciate the value across that end-to-end chain, but they do see a very discrete cost associated to their service provider in this instance. And so educating them and taking a more holistic view is something that is part of that customer awareness piece, and articulating value not only at a price point, but also a broader opportunity. So it's a really valid point and something that we all face into for sure. I think, on the points around resilience and recoverability, I think, spot on, Simone. It's acknowledged as much, this high reliance on technology means that there will be a break point at some point, and our customers are telling that us as well. But it is certainly, how do we communicate, notify and recover and set expectations around when we will be resuming business is really fundamentally the key aspect. And that's not just with direct service providers, right? That is across the network. So we're all in the same game here around making sure that experience is a holistic one and the best one our customers can have, independent of whether it's your customer or not. So yeah, very, very valid points. So, but I think, the other point that we want to impart on customers is that there is a real need for customers to think beyond just their interactions with an institution, a bank, a payment service provider. So that is not where the payment starts and stops. And so, looking deep into their own systems, processes, etc., is required as part of this journey. And that is exactly to your point made earlier, Simone, around change. It is not just that payment process and releasing it as a batch or a message or whatnot. It is fundamentally, a potential shift in your business operating model that creates an opportunity for customers to be looking at.
Thank you. And I love the points that I think a number of you have made about convenience, and the fact that particularly for some small business owners, the business hours are when they're operating they're running their business, interacting with customers, and then the after hours kind of time is when they have time to actually do things for the business. And I really love the point that in the way the move to MPP and some of the kind of convenience and responsiveness means the payments services are there when the business owners need to interact with them.
Rhonda, you've gone on mute.
Sorry, I want to come to the point of, we've said a number of times that the industry, the payments industry, not just banks, is working with the government, and we're here to work with customers, business and retail customers on this. So if there's somebody in the audience, wondering how can their business work with the payments provider or their bank? So what do they need to do to get started or move to that next step in that transition? I wonder if, Katrina, I can start with you just to speak briefly about what MPP is doing in the background to support this, and then I'll come to the other panelists for their perspective.
Thanks, Rhonda. So we're basically looking to run a kind of a really broad program of work that's focused on how we best support industry, the banks and corporates and others in this change process. So that has kind of really three elements. One is around, from a platform perspective, what are the things that we need to do to have in place as we think about the kind of capabilities and what's required to support the scale up of transactions. And that's looking at things like, what's the capacity of the platform? How do we ensure that we've got sufficient kind of throughput ability to take on these higher transaction levels, and working with the banks to ensure that that's in place, but also for other elements of the infrastructure as well, like, the FS as well from a settlement perspective. We're also looking at what we need to do to uplift the ISO version as well for the platform. So, we went live back in 2018 with a version of ISO from 2014, and we need to look at how we kind of modernise that as well. And that will also unlock some additional benefits as well in terms of how we can use some of the message fields within the MPP payment to help support processing some of these particular payments, where you want to really make sure that you are using the structured data capabilities of the MPP. And also looking at, sort of, as we've mentioned, what needs to be done from a resilience perspective, what do we need to do from a reach perspective, etc. And then we're kind of working very closely with our participating organisations as well to look at sort of how do we help them work through what they need to do in their own environments and their readiness and what that looks like, and how we kind of ensure that people are starting to think about what that journey is going to mean, and how they're going to support their business and corporate customers to migrate these payments. And then there's a kind of broader sort of market kind of change management effort that we're focused on as well. We think as part of the work that's required to support industry through this change is to be able to kind of communicate the work that we're doing, where the MPP is from a readiness perspective, but also how do corporates and businesses need to think about the change that's required, what are some of the benefits that the MPP will be able to unlock, and how they can think about that in relation to their payment processing, and where they might want to start looking at some of that as well, because it's going to be a multi-year journey, and a lot of organisations and businesses will think about what's the right sequencing for how to migrate payments over to the MPP, and what's going to give them kind of, the most benefit first that they might want to start thinking about. And how do we also really work with other key players in the marketplace who have a role to play there, those intermediaries like ERP providers or cloud accounting software providers or others who are really kind of integral to how payments get processed in the marketplace, and what they need to do from a readiness perspective as well. So we're putting in place a kind of a really kind of broad piece of work to really support industry through that change management effort, and ensure that the right information is getting out to the marketplace as well.
Peter, can I come to you next, and then Carolyn, and finishing with Simone?
Yeah, certainly. So I think, if you're, regardless of who your provider is, or that you're starting to think about it now, 2030 is not that far away. It feels like a long way away, but it's not. So people do need to start thinking about it and starting to plan. Any organisation will need to think about what does it take to do that, and as Katrina pointed out, that sequencing of change of payments and migration of payment methods. And you've got to think about what does that mean in terms of technical resourcing, the cost of shifting, and how do you build that into your own business. Working with your provider, they can all certainly give you what that means in terms of time and what resources are required, technical or project management. I think it's really important that businesses understand, we talked about that before, what are the operational efficiencies that they're going to gain from this, and, you know, what processes need to change in their business. It's no use telling your end customer that you're going to allow real-time payments if the product or the service that you're providing doesn't happen for 3 days because it failed on the experience part. So I think it's thinking about that. You know, governments need to think about that as well. We think about use cases where you're driving along in the middle of the night and you think, oh my goodness, I didn't pay my registration, or I forgot to renew my license, and so now I need to do that. That's okay if you make the real-time payment, but as long as the government then registers it, so when the policeman pulls you up in an hour's time, he recognises that you've made that payment. So I think they're all things that we've all got to think about regardless of what the product or service that we have in there. Don't leave it to the last minute. Start to have that conversation now is the key thing that I would put out there.
Great. Carolyn?
Yeah, I think, you know, Peter's touched on all the important components and considerations for a customer or any business. I think, you know, one of the thoughts would be, you know, what role does payments play in your business objectives? And can it play more of a part? And what are the opportunities that presents? I think that is a critical thought process that needs to come into play in order to contemplate all of those considerations that Peter mentioned. If I, you know, want to take that opportunity, but I need support in doing that, you know, what are the avenues for getting that support? Because this will be not necessarily just a lift and shift, there will be a change, but perhaps it needs to be a roadmap or strategic pathway to get to that point. So that would be the consideration.
Simone?
I would echo the very wise advice shared by everyone else. I would say it is now time to consider, if you don't have a payment strategy in your business, you're missing a trick. Make one. It's not just a thing that you plug in and hope it runs every day. You need a strategy about how you're going to manage this change, because there's so much opportunity here for businesses. But talk to everyone in your business. Talk to your CFO or your treasurer or your accountant about, what if we had a thing where we've got money sitting in a term deposit and as needed it comes across? Talk to your exceptions department. How many chargebacks, disputes and things could we avoid if we move across to this new rail? What does our decline payment strategy look like? How do we fix that, and how do we bring that right where it counts to the front of our business, in front of our customers, and talk to them about it too? In a way that makes sense to them. You don't need to know about your ISOs from your batch files. That's information that you can get from the full network of support. I think that one of the things to take away is that everyone's really enthusiastic to talk to businesses about this. So you will get the information you need, but you need to prepare yourself to know what it is you need to ask.
Sounds like it's very much not just, as you say, not just plugging into something, but really thinking about how you can use the features and functions to make your business more attractive to your customers. Yep. I want to now move to winding down the cheque system in Australia. So going back to what the government has said in their strategic plan and in the subsequent consultation that Treasury ran about, you know, the how and the timing of it. As to the why, there's been an almost 90% drop in cheque volumes over the last 10 years, from what was a reasonably common way to pay for consumers and businesses. Cheques now comprise only 0.2% of non-cash retail payments in Australia. So when Treasury consulted on, you know, how we do this, very much the key words that kind of stuck in my mind were committing to ensure the transition is orderly, that users are adequately supported, and adverse impacts are minimised. And those are, I think, the key words that the payments industry as a whole will take into this journey. It's really about making sure information is available, making sure support is there. So this is, you know, we are going to make this change as a country, and we'll do it in an orderly way. I I want to open up to the panelists, just maybe starting with you, Peter. One of the things that Treasury and the government has recognised is there's a role for government in this. There's, legislation and processes and, other regulatory requirements that need to change to allow this, the cheque system to be wound down. I wonder if you could briefly speak to from your perspective, what is the work that the government can do to support?
Yeah, and I think there's two parts of government play here. There's the government as a customer, and there's the government as an example to everybody else. It's no use the government being a proponent for real-time and digital payments if they continue to send us cheques in the mail. So they have done, the state governments that we certainly look after have taken a really good broad view of how do we start to wind down cheques and we start to move into them. And I think it plays in two parts. The biggest user of cheques is government to government, their own internal agencies. And so most of them have started that and progressed it well to start moving away from that. So there are no more intra-agency payments. The other part is thinking about, and Katrina touched on it right at the very beginning, we've just gone through an extraordinary period during COVID where government had to operate really quickly to large numbers of citizens with things like grant payments. And to understand how you were going to get that out there, acknowledging that potentially it's no use giving somebody a cheque if you couldn't get in a car to go and bank it. So you have to be able to figure out that way and that process early. And taking, I think, citizens on that journey to understand that it's a secure way of operating and putting in place the processes that they need to do that. I think promotion of digital channels, acknowledging that, in Australia we have a lot of remote and regional areas, but we also have a reasonable set of vulnerable customers. We have people that, domestic violence and that sort of thing, that digital payments sometimes are a means of actually punishing them because they don't have access to things. They need access to their bank accounts. You think about people in remote and regional areas, people that are perhaps older Australians that are used to using cheques. You have to think about all those vulnerable communities, or even communities that we don't have satellites to, where they can't use FPOS or potentially get access to bank accounts through their telephone. So, government needs to consider all of those cohorts as well when we're thinking about how do we move away from that. So I suspect that there will be a long tail to it. We've seen recently in the press a bit of a resurgence, and I'd say only in the minority of people that want to use cash. I don't think we're going to see that same resurgence about people that want to use cheques. And, all of the industry is moving at different paces to the 2030 deadline. But you need to start planning for that now about how are you going to make that migration possible, because it will take time for you to move that for yourself and your customers.
Thank you. That's an excellent point. And I also want to acknowledge that AusPayNet is leading a lot of the kind of industry level work on winding down the cheque system. And the ABA and our members are certainly here to support that process and be part of that process. And it's about, like Peter touched on, going to go into some of the use cases and how cheques are being used and what alternatives are there, what support is needed. So it's not a one size fits all kind of project. It's very similar to some of the work that the MPP's done on migrating payments from BECS to the MPP. It's about what is the issue in this pocket and what industry stakeholders do we need to involve. So, for example, we take e-conveyancing, a lot of cheques are asset sales and asset financing. So what are the reasons that cheques are being used today? Are there regulatory requirements, and are there practical considerations? What are the, I guess some of the processes and kind of risk appetite considerations that's kind of grown up around the ability to hand over a paper payment, and how do those risk appetite questions and processes need to change to facilitate an orderly kind of move to digital payments, where it's not going to be a one-for-one, but there may well be other benefits and convenience that come with the change. We just need to kind of really map our way there. So that's, I guess, from the ABA's kind of industry, banking industry perspective. I wondered, Carolyn and Simone, do you have any other comments or thoughts to add on just that journey that we're all embarking on?
Yeah, I mean, I just reiterating that it should be a smooth transition. So ensuring that no one is left behind, and even managing that experience as participants so that it's not a catalyst for participants to take an accelerated exit without considering what that means to not only consumers and citizens, but also other participants in the network, because it continues to be a network of value. We still have to resolve a $290 billion worth of value in the system. So that's not an immaterial amount to consider. We have a role to play in terms of offering the alternatives, whether digital or otherwise. And sometimes the otherwise is not necessarily about the payment itself, but ensuring the processes around it help facilitate the particular challenge or use case that does at the moment seem to be met by a cheque. So, you know, these are all significant considerations. I think, you know, whilst every participant needs to consider their own business case for exit, there is, you know, I think genuinely we all need to make sure that that's done in a cohesive fashion so that there is a smoothing of the operational impacts as well as the customer experience, if anything.
Simone, anything to add?
No, just reinforcing what everyone said. Cheques is tricky because there's no like-for-like replacement, and cheques are the financial lifeblood for a lot of people who, through circumstance or choice, have not or cannot engage in digital means. I think that Carolyn's right in saying we have to move together on this, because if someone sort of breaks rank and moves out, that will actually have, I think, adverse impacts on the end consumers, the very people that we're trying to protect in the migration. But luckily for us, our banking industry has had experience in working together on system design and migration. So I think we're in a good spot to create that orderly transition. I love the word orderly. It reminds me of school kids lining up to go into a classroom, but I think it's apt in this circumstance.
And I think to add to that, I think, you know, as Peter mentioned, I think there's a real opportunity if you actually look at the use cases and who actually are the ones that are issuing cheques and the reasons why, how we focus on some of those opportunities like government, also the banks. I mean, the banks themselves are issuing a lot of cheques out to customers as well for various reasons, you know, as well as corporates and others, and actually kind of focusing on some of those opportunities which are maybe a bit more within our control to influence versus, you know, other use cases that you know might take a little bit more time to work through, because there's a lot of additional considerations that need to come into play as well.
And I think Katrina's exactly right. I sat there the other day looking at a remediation of which a bunch of cheques would be sent out, and I'm thinking what will happen in the future when you do not know the BSB and account number, you haven't been able to contact a customer or a past customer. And so I think they're things that we're all working our way through at the moment to try and figure out.
Yeah, all excellent points. So for the audience, if you have any questions for the panel, please put them through using the Q&A function on the webinar on the bar across the top. But I just want to kind of wrap up on the cheques point to say it is a very complex and large topic in itself, and we are not going to do full justice to this issue today. Because, you know, there is a lot more kind of information gathering that is being done by AusPayNet and by the payments industry. But I think it's, as you have all said, it's not just a banking story or a payment story. It's also about kind of identifying key industry stakeholders for particular sectors or use cases and kind of bringing them along, consulting them on what, you know, what are the requirements and what are the procedural other barriers in the way, and what are the things that you know, service providers or other stakeholders can do to really help to make that happen. So we're already seeing some people can put their heads together and, you know, really get into the crux of the problem. And it's not maybe the whole transaction that needs to be moved onto digital payments, but what is the one thing where maybe you do need that instant confirmation that something has been done, and how can we solve for that? But maybe while we're waiting for some audience questions, I wonder if I can kind of flip the question around for the panel, maybe thinking about yourselves as consumers that interact with businesses and governments and banks. What are some of the things that you would like to see from our Australian payment system in the next while?
I'll start. So I'd love to be able to use Pay2 to, you know, pay my ATO bills and my utility bills and my school bills in particular. That would be great. You know, I think there's a lot of opportunity there from a customer perspective, in terms of how some of the MPP capabilities can be used that, you know, will certainly make my life a lot better.
I would love to never have to have our BSB and account number come through to contribute to the teacher's gift at school, or, you know, I just think that there's so many daily use cases that sit outside our normal transaction in a commercial sense that could be improved as we all get used to things like PayID. I also think it should be a rule that when Katrina's on a panel, at the end of the panel, you need to tell us how many real-time transactions have happened while we've been on the panel. I think that'd be...
Oh, I'll go as well. Katrina stole my thunder. Pay2, you know, that would be the ultimate experience, I think. And yeah, I'm really loving that it's coming to life, but there's more to come for sure. But certainly the other opportunity, I truly believe, is a greater volume of corporate transactions really flowing through, and them making use of that. And as a consumer of that, seeing them enjoy that for sure.
And I think, you know, Katrina and Carolyn both said it. You know, I'm the one ringing my utilities now saying, do you have Pay2? I'm biased, obviously, that I'd like people to take that up. But I think, you know, when we think about, we talked about at the beginning, Australia is blessed to have one of the most modern and cohesive payment systems in the world. If you even think about the United States, that everyone always says is in advance of everyone, we are so lucky to have the payment systems that we do that are as secure as they are. So yeah, Pay2 is great. I'd love to see the end of, you know, I'm not a big user of cash. My husband would disagree with me. But certainly, you know, when you start to see those things like cheques and that run down, all of those processes that attach to it as well, I think there's nothing like getting a cheque in the mail that you think, oh, now I've got to go to a branch, or maybe I've got to take a photo of it and I've got to do it, or I've got to put it into an ATM. So all of those things will just make life a little bit easier for us, but acknowledging not everybody is the same, as Simone said. So we need to move in an orderly fashion.
And to answer your question, Simone, we see about 3 real-time payments every second happen in Australia. So probably by the time we're done, roughly about 300 payments will have been done. So across the MPPs.
Excellent. But maybe let's come back to Pay2, because that's come up quite a lot, and that's obviously something that's being rolled out now. Simone, coming back to you again, if I put myself in the shoes of a small business owner, got my POS terminal, it's worked, it's working well. What is the reason for thinking about Pay2?
I think it comes back to some of the fundamentals we spoke about to start with. Choice. How do I give my customers more choice in how they give me money? That's a really important thing to get right. It's cost. How do I make sure that I'm having some control and optionality in my cost of acceptance of payments? And also it's opportunity. How do I remove the need for my customers to walk into my shop and pay me? Maybe they are wanting to prepay me and come in and pick up the goods or service. Maybe there's an opportunity to actually establish an ongoing that magic recurring revenue relationship with my customer that I can't do with my POS terminal today, but I can certainly do by setting up Pay2. And it should, you know, you don't need to set up Pay2 online at your computer terminal, you could have a provider that's allowing you to have a QR code where people are self-onboarding to. There's all these different ways that you can start bringing a more rich payment experience in, and maybe improving, people standing in line waiting to beep their phone in your terminal. Maybe they've paid at the back of the line because they saw the thing on the wall. There's all these amazing things that you can do if you sort of remove your tether to the POS machine.
And Peter and Caroline,
Can I just add something?
Yeah,
Simone said, I think we're seeing it more and more around those subscription services, building on that relationship with your customer. I know I do it today with my dog's vet tablets. So every quarter they roll around. As soon as I give them the tablet, it turns up at the mailbox. I bought makeup the other day and I could get it cheaper as long as I signed up for a subscription. Now, credit card was the only way of doing that. It would have been great if Pay 2 had been an option for me, which goes to Simone's point around choice. But that develops that relationship where you're getting that recurring buying as well with your customer. You don't have to think about it.
and how is that different or better than direct debit?
Well, direct debit, right, well, we all know what we'd have to do now. I'd have to go and get a form and have to sign it. Then we'd have to set it up and we know what that takes. It's that simplicity and ease of the setup that I think helps us with it. But also I feel really secure. And I think from a business point of view, that surety of payment, whenever you pay with a credit card, there's always an opportunity that's going to be charged back. With Pay 2 what it's going to happen almost instantly, whether it's going to reject or whether it's going to be successful. So I think that's important for every customer.
And also for direct debit, if we're really keeping that first example, the POS in frame, and I'm trying to sign up to your Coffee of the Month club and I want to take one with me, a direct debit, I could sign your form. Maybe I sign a PDF on my phone and leave with the coffee. I may never pay for it. That form might be, not processed appropriately. I might have accidentally put Rhonda's bank account instead of mine in. I might no money in my account. So all of those things make direct debit not really a good fit for purpose when we're thinking about a bricks and clicks shop where it's blended, but you might need to really have confirmation that the payment was accurate, bank account accurate. We're good to go before you leave.
And I think also from a customer perspective, I then actually have visibility to, what I have established with my Pay 2 agreement, and I can see that in my banking channel. Whereas I set up a direct debit today, and even some, subscription payments that I've kind of put on, my card, and I can't really remember what I've done and what's coming out from, which card and what account and so trying to keep track of that. So as a customer, I've got much more visibility and control over my payments as well.
That's right. We've got enough bill shock in our world. We don't need to be surprised by what else appears on your bank statement. So, agree.
Excellent. Unless there are any final comments from our panel, that's been, for me at least, a fascinating discussion, and really appreciate the time to really get into some of these issues with this group. And thank you for our audience for joining, and we hope that you have taken something away from the session today. And for everyone else who's still online, just want to wrap up by thanking you once again, but also just a reminder that the ABA's banking conference is coming up on the 26th and 27th of June in Melbourne. So the tickets are still available. So we would love to see all of you there. That's it. Great.
Thank you, everyone.
Thank you, everybody.
Thank you, everyone.
Bye-bye.
Thanks,
Have a great
Rhonda.
afternoon.
Thanks.
Bye.
Bye.